This video discusses economic and financial strategies to be considered while investing in real estate. Investing in your first real estate property can be one of the scariest things an entrepreneur or early professional might do. However, informed decisions allow the investor to increase the probability of success and mitigate the fear of investing. From an economic and financial perspective, there are several elements that investors and real estate professionals need to consider, such as property selection and analysis, time to buy or sell, financing and managing real estate. First, analyze key elements to select the property. It is crucial to define the type of real estate property that the investor is looking. Previous videos show that real estate investors can select single-family, multifamily, and commercial real estate, among others. Also, a detailed on-site review of the property must be made to define the physical condition, improvements, and probable repair costs. These elements include diagnostics on the building site, drainage, paving, windows, walls, structural, roofing, interior, mechanical systems such as heating and/or air conditioner, plumbing, and electrical systems. Hence, the investor must request an appraisal and a survey. The appraisal is made by a professional providing an expert valuation of the property. The survey is the process, also made by a professional, by which a parcel of land is measured, outlining legal boundaries and features. This property assessment will require the investor to pay a licensed professional for the evaluation. Despite of the cost, it is worth knowing the property's current condition. It is also important to analyze the surroundings of the property. Review health services, roads, schools, hospitals, and house developments in the property's location. These elements will affect the property price and the property tax. The higher the price of the property, the higher the property taxes. The investor can also collect information from local governmental sites. Additionally, request the real estate agent to perform a comparative market analysis to analyze the current housing market. The industry, country, state, and county economics can define a perfect time to buy or sell. Real estate investors need to be aware of the environmental changes that might drive prices to drop or increase. The prices of the properties are determined by competition, production, and the forces of law and demand. Some demand determinants, suggested by experts like Piranakis, include income, proximity to work, transport, mortgage interest, cost of maintenance, and property taxes. Supply determinants comprise land availability and cost, building regulations, construction costs, loan interest rate, insurance, and taxes. Usually, a real estate property is an excellent investment because it tends to increase or maintain its value. Nevertheless, economic alterations might also generate sudden changes that the investor needs to consider when buying or selling a property. How to finance real estate is another critical element to consider while selling or buying a property. Again, investigating each bank's requirements and interest rate is crucial if an investor uses financing instruments. The owner's equity is also needed to be considered, as the financial value of real estate minus the sum of all mortgage debt. The equity is also affected by the property's market value, which fluctuates over time. Finally, managing real estate is another element to analyze while buying or selling a property. In the U.S., the owner is allowed to manage his or her properties. However, it is recommended to hire a professional property manager, as seen in previous videos. Thank you for watching. Please, do not forget to subscribe to our YouTube channel.